Good morning, happy Wednesday. Please give me some okay that you can hear me. I'm sorry for the little late, got stuck in traffic. I had to take my kids to some place and got stuck in the traffic back. Sorry for that. Thank you very much, John. Thank you very much. And as always, wonderful to have you with us. Thank you, my friend. Okay, guys, so quick reminder, today is the FOMC in about 3 hours from now. So there is a good chance that some hints would come from the event, from the publishing. And the way it looks, traders are waiting for that. Now we got a natural pullback after last couple of weeks dollar strength, and the biggest question would be, okay, what's next, right? That would be the main thing to try and get. So we will see how that goes. Meanwhile, let's see our positions. Let's start with the Aussie Kiwi, the first one that we had yesterday on the short term. Reached our first destination. This destination is right here, the 38.2 of the big cycle and the 61.8 expansion of this cycle. So the first level is there. If we manage to hold and break, our next destination is going to be slightly below 109. We do need to pay attention to this developing divergence, but on the same time, it's all stuck yet inside one candle. Normally, that's signs of continuations. There's not a rule of thumb, right? But that's normally a sign of continuation. Plus, we don't have any higher highs created, combined, completed. Daily chart is still not a bullish hidden divergence with no way, so the bearish pressure, at least as for now, remains. Okay, so this is the first one we have going. I love to do partial cash out as it gives like one-to-one risk reward in that situations. I love to at least move stop loss to break even, but take out partials. That always depends on the total performance, right? Total performance principle, just quick reminder, is simple meaning. How goes your week, or how goes your day, or how goes your month, right? Everyone with his own or her own trading distances. So if you have a great run, give yourself a chance stop loss to break even. You don't lose, but you can always earn more. If you are somewhere in the middle, like break even zone, make the money. At the end of the day, trading is all about making money, right? Not about being right, not about being smart or making the best calls. It's about making money. So when you get the chance, make your money. And that's all, of course. So that the bottom line here is the money management, from my point of view, is always according to the total performance. Where do we stand? How does that go in the performance? Okay, Costas, I suspect the voice is problem with for you because the sound test I have here is clean and 100%. So not sure why. Try to reinstall. Maybe go to webinar software on your PC, the one that installed there. So not sure why. Okay, so that's for the Aussie Kiwi. Next ones, we were in the EuroCAD. John, it also crackles, guys. How is the sound for the rest? Maybe it's on my side because it's weird because the sound check says 100%. Sound is good. Clear. You hear me clear? Nothing. John, so I guess you joined Costas. It's only you guys. Not sure why. Not sure why. Maybe it has to do with Wi-Fi. I don't know, really. But the sound test on my side is the 100%, not even 90. Not sure. I don't know. I am not sure what to say. I really don't know. Yeah, sometimes the internet connection does affect the sound. I'm sorry for that, guys, but I really have nothing to do because on my side it's 100%, not even 90, which sometimes it does 90, but now it's 100. You still get the message. Okay, that's the that's the most important thing. All right, guys. So what do we have on the EuroCAD? We were after buys here. We got a beautiful buy. We got a beautiful continuation yesterday. That was a bullish. Oops, wrong pen. That was a bullish hidden divergence right here. There was a one bullish hidden divergence right here, and we got these two pushes. Are they best or not? Well, the daily and 4 hour are still bullish. None of them had a false break. None of them had lower lows. Levels are being reached now. So basically, let's go back to the whole idea, because we enjoy the intra-week, right? The short-term buys. Now let's go to return to the main idea. We are for sell for the long term, right? That was our plan. So as long as this area holds, invalidation. As long as this area holds, we are after sales. That's the bottom line. However, weekly is a double cycle with divergence, which came after bullish hidden, right? That was bullish hidden, now turned to be continuing. Daily is a cycle by itself with a divergence, right? And the 4 hour was a cycle by itself, a triple cycle with extreme divergence, ending this run. 1, 2, 3. And we have an extreme here, right? So basically, it all fits in one piece of puzzle. We are for long. Now, if the weekly is bullish divergence, by ideal, the daily is the one that has to be corrective cycle, right? By ideal. Now, that means that there is a good possibility we are going for something like that, or something like that, kind of a range before the continuation, right? So for the long run, we want to sell rallies. In order to be able to join back the weekly, daily has to bring the signs, two waves, range, or at least one big wave towards the correction zone here with bearish hidden divergence. As for now, there is nothing like that, right? Daily last divergence is still bullish. 4 hour starts to form its own divergence here, right? On that place. And in order to be able to combine the daily and the 4 hour must be together. And the daily and the and the 4 hour and the 1 hour must be together as well. Now, if we take a look on that situation, what can we learn? That 100 is kind of cleaned right now, right? There was no divergence on the last part, correct? No divergence on the last part, still pushing up. And each of the 4 hour chart legs, if this is the 4 hour chart leg, each of these legs must be a cycle by itself. Now, the first one was a cycle by itself, this leg. The second leg is still not, because we don't have divergence between these two. So it's still ongoing. And we don't have the divergence here, even though the divergence does appear, there is no two candles rule in play. Therefore, there are no yet bearish signs for the long term. So yes, we can get some bounces, definitely, but it does still hold the bullish pressure. And most likely, bounces here are still for buys. Now we have the trend line, we have the supportive zone, right? Whenever we get the bullish signs continuation, most likely this pair is still bullish. We do not have any false break, we do not have any trendline breakout, we do not have any lower lows. Therefore, the pressure still remains bullish. Is that clear, guys? Okay. Now, the reason I go here into deeper explanation is because I saw a lot of exciting ideas in the group. Let's sell the EuroCAD. In order, well, it came from the 1 hour chart, and that's where the mistake normally happens. In order to be able to trade the 1 hour chart, higher time frames must be clear. Must. Okay? Remember that. Otherwise, it normally ends up with early entries, and early entries normally ends up with a loss. So I don't say there cannot be any retraces, short-term retraces. They could be, but they don't worth to trade, because that could be like this, that could be like a range, that could be like a little two wave, something like 1, 2, and continuation, or that could be just a continuation. We never know in that situation, and that's why we don't want to go against higher time frames. We want to go with, right? And that's why bullish hidden divergences 1 and 2 should be in play, because all the higher time frames are still pushing up. Okay, makes sense? So that's the EuroCAD. Next one, pound Aussie, the pair that we have been long since, well, yesterday it triggered basically. Our idea, just a quick reminder, came from the daily, right? It was something like that: triple, double, false break, bullish divergence. So far, so good. 4 hour chart turned to be a bullish divergence by itself, and the 1 hour chart was holding the triple bottom, bullish divergence, and the last two waves breakout. So we get the run, everything goes smooth and beautiful, and as per the rule of the divergences, quick reminder, there is the multi-time frame divergence webinar. If you still did not have the chance to watch it, please, on your comfort time, on your own convenience, please watch that. It will clear a lot of things for you in that style of trading. Now, according to that, we start to get a divergence against, right? Now we have the two candles finally against us, right? Activated. 1, 2, cleaned. We have divergence again. So at least stop loss to break even, right? At least. And my preferences in such situation, because the risk reward is pretty nice, is to make out partial cash out, something like 60-70%. The rest can go all the way as long as one higher time frame does not have divergence by itself. And as for now, it doesn't. It is very close to the 61.8 expansion, but it still has the room. And there is a very good chance this is what's going to happen. And that's about, I don't know, 40, 50, 60 more points, but it still has the room. And that's why partial cash out and not full cash out. And who knows, maybe it's going to go through that all the way to the next level, the 100, which also very possible, right? So we never know how exactly and how strong the move can be. That's why we always, when we can, and the higher time frames give us the possibility, we prefer to get a chance. Okay, so that's for the pound Aussie update, a pair that we also have running since the beginning of the week. Now, Costas, Could you tell me opinion about Kiwi Yen cells? Yes, sure. I'll go to the Kiwi Yen in a second. Guys, by the way, while I go over my setups from a Monday session, right? What the plan that we have and the setups as we trade. If you have any specific pair that you want me to go over, please let me know. Okay, just write down in the chat so I know exactly where to go. Okay. If there is anything you trade and you want to be covered. But Costas, before I answer you, Michael, why was pound Aussie bought? Well, once again, quickly, last daily is a double cycle, so we are after buys towards 38.2. Last divergence is bullish. 4-hour chart divergence, last divergence is bullish. It was bullish, hidden turn to be continuing. And the triple time frame confirmation was the 1-hour chart. And we got the divergence here. And we got the last two waves here and a breakout. Or in that case, the last high broken was here. And all the three time frames lined up. All of them provide the same direction. And this is the buy. Okay, and the management currently is according to the divergence against. So on that situation, one of the things has to be done, at least stop loss to break even in order not to turn profitable trade into, who knows, maybe possible losing trade, right? And to make money. That's the purposes of the management when we have signs against us. Okay. All right. New Zealandian yen, that was the request about the Kiwi yen. So here we are. Our idea is still bearish sell in the weekly cycle. Weekly does have divergence against, little divergence again. Daily does not have any divergence against. So what we need is a daily to fit in the weekly. Right, so bearish hidden divergence, and we can continue the sell. As for now, we don't have any, so we are waiting for the signs of continuation. 4-hour chart should be two waves with the divergence. This cannot be called two waves as we don't have any divergence there. If we take a look on the big view, it could, but it has to fit in with a level. Right, and daily must be a bearish sign by itself. So here you go. Now, in that situation, we need to make sure each of the legs is a cycle by itself. First leg is a cycle. Second leg is a cycle as well. Well, let's see what we have here. That's the first, no divergence inside, no two candles with the divergence inside. Well, this is your second one. It's basically, no, we don't have two candles here. 1, 2, 2. Not sure how much I like it, to be honest. But you do have the divergence on the last part, not on the whole part, and that means you can't really call that a cycle, right? That can't fit in here, that can't fit in here. So the only way it can fit is something like that, because that's where you get the divergence developing, but the levels are higher. So not enough sells at this stage. Not enough sell reasons for in that stage. Okay, 4-hour as we just saw, still forming. Daily, still forming its own bearish hidden. I wouldn't rush to sell here. I wouldn't rush. There is a very good chance we're going to the 261.8, which was right here. 261.8. So in such situations, my preferences, it's double confirmation. So you get the first sign, which should be like lower lows, right? And then the double confirmation, like a bearish hidden divergence, for example. Just to play safer, when the conditions are not too clear, and you don't have all the time frames lined up together in the same situation exactly, better to play safer. Okay. Francis Cadian, sure. Cadian. Okay, Cadian, we are bearish according to the weekly and daily pressures. Convergence, meaning we need a corrective cycle, meaning we need two waves or a range. As for now, can't say we have two waves. Well, this is the two waves that are developing. The trend line still not broken. So I don't see any reason to sell right now. None of the trend lines was broken in this situation. You don't have lower lows nowhere yet. So I'm not. Why a sell? What made you here go in a sell? Based on what? I really don't see anything here, to be honest. I guess this one, Francis. That may be what confused you here. Well, you can see that you also have kind of a bullish hidden divergence on the breakout here, right? 4 hour not ready, 4 hour was not broken, 1 hour is bullish divergence between the two spots, little bullish hidden on that situation. From my point of view, it has no signs yet for sells. I am definitely after sells, no doubt, but I want to see the 4 hour chart turning to be two waves, which means here or even slightly higher. Then each of the legs to be a cycle by itself, trendline breakout for more conservative, and then sells. Okay. Correct. It is on the watch list, looking for the sells, but the sells must, because it's a weekly cycle. Yeah, the sells must be confirmed with daily and 4 hour chart. Now daily has the confirmation for us with a convergence. After convergence, 4 hour should be corrective cycle or hidden divergence, and the hidden divergence was basically in play previous week here and paid all the way down until we got kind of a double bottom with divergence by itself, right? So that makes basically the end for this journey, and now we're looking for the next setup. Next setup is the two waves range. It could also be another hidden divergence, but after such high, it's rare cases to get a new high. Very rare cases, and that's why most likely we are here into two waves or kind of a range or kind of a channel. That's the likely possibilities. That's why I wouldn't rush yet. Okay. All right, there's the next question about the DAX. But before I move to commodities and everything, is there any question about any other pairs, guys, from your list? Okay, so not yet, right? Okay, about the majors and in general. Well, the majors, the euro dollar, we are bullish here for the longer run, right? Short run definitely could make the corrections. It's a special cycle right now. After today, yeah, it was confirmed. After today's FOMC, you can definitely start getting some kind of two waves or some kind of a range play here before the next portion. So I would definitely at least move stop loss to break even, but make some partial cash out. The entry was here. That was the bullish hidden divergence. It was a couple of days ago. This was the next one, but not two candles rule in place, so it's kind of here more aggressive, much more aggressive. Right now, the longs have all the reasons to start correction to the downside. So Aussie Kiwi I covered the beginning. Aussie Kiwi also reached the first magnet zone, partial cash out. The next might be all the way down to here. Okay. Euro pound. Well, yeah, Euro pound still bearish, but again, we need the 4-hour chart to fit in and give us the opportunity, right? The daily divergence is bearish. 4-hour now is bearish as well. We need to start and get this. Patience is required with this pair. And remember, it's still aggressive, guys, because the daily trend line not broken. So whatever it is on the short term, on the intraday, is aggressive, small risk. The daily still don't have any lower low or any trend line breakout. Still, right? So it can easily also make one more false break. That's why very important to remember, no rushing here. It's one of these situations that patience pays much more than rushing. Okay. All right. Indices and commodities. So the German DAX, we are after sell. The last divergence on the daily is bullish, meaning 4-hour has to be corrective cycle, meaning 2 waves. So it's still possible to do something like that, or at least kind of ranging correction before the sells. Meanwhile, it doesn't do it, therefore it doesn't short it. Okay, very simple. Now there is a bearish hidden divergence in play here, but the daily is bullish divergence, so 4-hour better to be corrective cycle, right? Remember that, very simple. The judgment is always like that. Oh, okay, bearish hidden divergence, meaning higher time frame should be free to go. Current time frame, higher time frame is not free to go. Therefore, we are after corrective cycle. As for now, we don't have it. So the way it could perform is easily short-term rallies, short-term buys before we get the confirmation. Okay, that's for the DAX. Now Nasdaq never broke its own pattern yet. Still holding, still fighting. Daily, not even talking about lower lows, so nothing to do with the indices. So it's all for the it's same for all the American indices. Okay. Now quick one which I want to update: oil. One of our scenarios for the oil was the range. Right, we are now sitting on the bottom of the range, making here 2 waves, bullish divergence, short-term correction. Bullish divergence meaning 4-hour chart should be corrective cycle, meaning 1, 2, or at least a range by itself. So for short-term oil, we can buy dips. For longer term, still likely it's after sells, but the short term now provides the opportunities to look for longs, basically. The idea here is we got these 2 waves from the daily, these 3 waves from the 4-hour, and that's what makes it to be now in play of a short-term pullbacks. Okay, they definitely are acceptable. Let me see if I have anything from my list to changed. No, covered. EuroCAD covered. Well, KiwiCAD is basically like the EuroCAD. Okay, pretty much the same. So the next question was from you guys. Pound yen. Pound yen. There is no daily divergence in play. Therefore, after sells, 4-hour has to be bearish hidden divergence, or two waves, or a range. 4 hour is a bearish hidden divergence. That means that 1 hour has to be double wave, correct? That's the idea. Let's check the double wave on the 1 hour chart. And if we have that, well, yeah, it's building it up right now. So the best thing here is to wait for the false break, get the lower lows, confirm the convergence idea, and sell the rallies. Okay, that would be the correct thing to do here. Okay, any questions here? The best part for the pound yen, because the 4 hour was a cycle here, the best part for the pound yen is exactly here and here. That's the zone. I would prefer here because this is a clearance zone. A lot of stop losses are located here. So if it clean this area, that should be a wonderful sell opportunity. From there, again, lower lows, sell the rallies. Okay, that's for the pound yen. The euro yen. Why? I have a question for you guys. Why do you go on pairs? Well, why do you focus on pairs that don't have cycles? Not euro yen, not pound yen have cycles. We explained it on Monday and previous week as well. None of them have cycles. They all based only on divergences. So why you stick there? I'm not quite sure about that. You understand it's risky, right? None other pairs moving. I totally disagree. Pound Aussie moving, Aussie Kiwi moving, cat pairs are moving. They all are from cycles. Euro cat, Kiwi cat, they all are in the cycles. So how exactly they're not moving? Euro dollar is moving, it's on the cycles. Aussie dollar was moving on the cycles. Aussie Kiwi in the cycle. How exactly it's not moving? No clear entries. Well, just explain the hidden divergences. Anyway, euro yen and pound yen, guys, that they don't have cycles. That means they're riskier. If you want to apply only the principle of the divergence, no problem. The last divergence of the euro yen weekly is bullish. Daily is bullish. So we must get a corrective cycle. That should be two waves or a range. Do we have two waves as for now on the 4 hour chart? I see only one wave. Therefore, I would definitely expect some kind of pullback, but after that, very likely continuation. Now, the first leg of the 4 hour chart is a special cycle or triple cycle, doesn't matter how you curse it, on the 1 hour chart, meaning this the first level we have, this is the second level we have, right? Pretty much like the pound yen, they're almost similar. So false breaks, lower lows, and that could be short-term buy, so a short-term sell. So if we got this, that's a short-term sell. Okay, that's the whole idea. But short-term, why short-term? Because weekly and daily divergences are bullish. So don't fall sorry, into these traps the market can do. It can also easy reach this zone before the sells. So in order to make it clear, wait for the false break, which we don't have even one yet. Wait for the false break, wait for lower lows, and that's your opportunity. If you try to make a hero call and say, oh, okay, so 1 hour chart divergence is going to crash, don't be surprised if it ends up with possible loss. When you go on 1 hour chart ignoring the higher time frames, that means you are playing aggressive, trying to be smarter than the market. Normally, unless you become lucky, normally that fails. 1 hour chart is irrelevant before the higher time frames agree. Okay, so that's the first, once again, the first place to pay attention to. If it continues, the next level is here. We expect short-term retraces. Okay, but for longer run, I don't see currently nothing really changed. Keep in mind the daily is also kind of a double cycle here, or even triple. So the 38.2 is the possible target. Okay, so I would go with short-term buy dips rather than currently trying to call it a top. My personal view. Okay, anything else, guys, from your list that you want to go over and cover? Quick reminder, sugar is on cryptos. I don't have anything there, really. Nothing changed on the crypto currently. It's the ETP paid, the Ethereum Bitcoin is on the list waiting for the signs. There are no signs yet. I don't see any reason to trader. Invest is different story, but for trading at this stage, I don't see nothing. Quick reminder about the sugar. We are waiting for the higher highs, right? The levels are amazing, around 10, 9. So again, we first of all want to see at least higher highs on this or this. Okay, that's what I would be doing. Pay attention, it's building, it's forming, it will come. So just patience. I'm also John. I'm also in the Ripple Invest. So that's for a hold or hodl, as they love to say it, right? All right. So that's all for now. Sorry, Ahmed. Dollar index. It's a mirror to the euro. Whatever you see here, you'll see on the euro. Dollar index has no cycles from the weekly. That was the cycle on the weekly. Paid the 38 to retrace. Currently, nothing too obvious, nothing too clear. So it looks like a mirror to the euro, which means this. I think we are going down for correction, and then likely buy again. But again, it's too early to get any kind of guess here. Even the double cycle here reached its target. So there is nothing to rely on as per cycles. As per divergences, last divergence from weekly is bearish. Last divergence on daily is bearish. Last divergence on 4 hour, well, it's convergence, not divergence. So it's yet like the euro, sell rallies. That's my view. But it's really, take a look on the euro. Dollar yen is the dollar index is the mirror to it. And that explains it because, like, I don't know how much, but about majority of the money for some reason is still going through the euro dollar. Why? No clue. It's a waste of opportunities from my point of view. But who am I? I'm not the market, right? We just trade facts. So okay, guys. So that's basically all for now. So far, so good. Many pairs are following the short-term plans, and we are now in a short-term period for the majority. Simply because the previous couple of weeks were amazing for the trend. That's all. So focus on the short term. That's the period right now. Okay. So see you in the Telegram groups, guys, and enjoy your day. Happy Wednesday. Bye for now. Thank you for being here.